Hello, good evening and welcome to Business Live. Coming up in this bulletin, Governor of the Bank of Ghana urges the public to remain confident as the central bank stands ready to ensure steady stability despite remittance inflows slow down.
Despite seasonal pressures and a moderation in remittance inflows in recent weeks, the cedi remains among the strongest currencies globally year to date, appreciating by about 21% as of September 12th.
The central bank raises concerns about the recent proposals for an increase in tariffs, warning of its potential risk to its decision in the ongoing MPC meeting.
Such as global trade disruptions or prospective utility tariff adjustments are assessed. Colleagues, our commitment remains firm.
We'll be live with an economist to analyze these concerns raised by the governor at the ongoing MPC meeting. Prices of petroleum products projected to go up by some significant margin from tomorrow as oil marketing companies respond to recent depreciation of the cedi. We'll be joined by the Chamber of Oil Marketing Companies. We have details of these and more lined up for you. Please stay on. Thanks so much for your company. I am Pius Kojobaka. And looking at our stories, Governor of the Bank of Ghana, Dr. Johnson Esiama, has assured that the cedi remains one of the strongest currencies globally, despite seasonal pressures and a slowdown in remittance inflows. Speaking at the ongoing Monetary Policy Committee meeting today, Dr. Esiama said that the central bank is working to address challenges affecting the cedi. More in this report.
The governor of the Bank of Ghana, Dr. Johnson Esiama, speaking at the opening of the MPC meeting, pointed out that usual seasonal trade fluctuations are putting some pressure on foreign currency demand. Nonetheless, he emphasized that these are temporal and manageable challenges and not signs of systemic weakness.
Despite seasonal pressures and a moderation in remittance inflows in recent weeks, the cedi remains among the strongest currencies globally year to date, appreciating by about 21% as of September 12th. The cedi now ranks alongside high performers such as the Russian ruble, the Swedish krona, the Norwegian krone, the Swiss franc, the euro, and the British pound. This outperformance reflects prudent monetary policy. It also reflects effective liquidity management at the central bank. It reflects fiscal consolidation, and it also reflects increased foreign exchange inflows. Now, the banking sector remains stable and improving also, with the capital adequacy ratio that is without reliefs rising to 19.5% in July, while NPLs remain elevated at 21.7%. They drop to 8.4% when fully provisioned losses are excluded.
The governor of the Bank of Ghana cited a combination of sound monetary policy, improved foreign exchange reserves, and strengthened regulatory oversight as reasons why the cedi continued to hold its value.
Meanwhile, Governor Dr. Johnson Esiama pointed out that the recent proposals for an increase in tariffs poses a risk to its deliberations ahead of the policy committee meeting today.
On the fiscal side, colleagues, execution in the first half of 2025 signaled consolidation. The deficit on commitment basis was contained at 0.7% of GDP, below target, contributing, together with cedi strength and external restructuring, to a decline in the public debt ratio by mid-year. Against this backdrop of easing inflation pressures, anchored expectations, and stronger buffers, the MPC in July, as you will recall, reduced the policy rate by 300 basis points to 25.0%, while reiterating our readiness to adjust as the disinflation process evolves and risks such as global trade disruptions or prospective utility tariff adjustments are assessed. Colleagues, our commitment remains firm, and these are to maintain price stability, to safeguard financial stability, and to create the conditions for inclusive and sustainable growth.
We want to analyze these concerns further. Joining us via Zoom is economist Professor Patrick Isuming. Thank you so much, sir, for joining us here on Business Live. And quickly, your thoughts about the governor's assurance that the cedi remains one of the strongest performing currencies despite the slowdown of remittance inflows. What do you think?
Well, good evening and good evening to viewers, and thanks for having me. I think, well, I mean, if you take from the beginning of the year, the cedi has still performed extremely strongly. If you look at where we started and where we are now, I think the concern people have is what has happened in the last three or 4 weeks, where we've seen the cedi losing some value. So I think, don't forget the president spoke about this last week. And the president made it clear that there was a correction going on. And that was what I expected the governor to happen. The governor seemed to be saying, there are temporary glitches here and there. Whereas, in fact, what is actually happening is a correction, because the rate at which the cedi appreciated that sharply was clearly not sustainable. And the bank and the fund has asked the central bank to minimize the intervention. And so it is the resultant correction. So I think it's good that the messaging is consistent. It shouldn't appear that the president is saying one thing and the governor is saying another thing. This is the second time that has happened. I think that's not very good.
All right. So what sort of signal does this send to the investor community, considering the seasonal pressures we are witnessing?
I think, to be honest, if the central bank wanted to support the cedi and keep it probably could have, because the reserve position is still extremely strong. Throughout the year, the export performance has been great, even though remittances have dived a little bit since the appreciation. But the reserve position is still strong. I think it just happens that there's been obvious concern from the IMF that the extent of intervention is too much. Otherwise, the BoG could have supported the cedi and then kept it, around the 11 to 10 range. But I think it's clear that this is not what we want to do, to pump so much of our reserves to try and support the cedi. So I think, for me, the right thing is being done, except that the communication is a little, you are just giving different signals. The president made it clear, and I do believe what the president said, that there's a sharp appreciation. It appears that, that was not the right level of the cedi. Now, there's correction being done. The central bank reducing the intervention is allowing the cedi to self-correct. And I think that's how we should take it, not to give a different impression.
I see. In the interim, what more must BoG do beyond sound monetary policy and, of course, improved foreign exchange reserves to hold fast the value of the cedi, you think?
I think, look, the BoG has done, as well as you can expect it to do. It's trying to tighten the regulations around the use of forex, and it's used up some of the reserves to support the cedi. We know that ultimately, the real side of the economy has to catch up. And even though our exports have been doing great, much of what has been happening is not necessarily because of diversification. It's just that, our export items are doing extremely well. Our traditional export items are doing very well. So if the real sector was doing well and we have diversified our export base, I think that will even put us in a much stronger position, because the key concern is that the strong position of our reserves right now is because of things on the international market being in our favor, in terms of how well the gold price is doing. Cocoa has done well also, and of course the fact that we've piled up a lot of gold reserves, all of that help us. But that we can't keep doing that forever, and especially the gold price. Who knows if things improve elsewhere, the gold price could quickly come down, and then suddenly our strong reserve position will look weaker. So I think it's important that we start doing the real sector measures that will improve domestic production and domestic productivity, that ensure that the gains that the city has made become real and sustained.
Is that to suggest that so far you've not seen that being done?
Well, I have to say yes, but it's not a criticism. It's not a criticism of what is not being done. It takes time for a new government to come in to implement the measures. Those are things that you can't change in a short time. You can't spend 8 months to improve your productivity, because there are still underlying difficulties in the Ghanaian economy. What we have done is to harvest the low-hanging fruit. The easier things that we can do, we have done them. But at the end of the day, we can't keep relying on that. So ultimately, we need to begin to see the central bank or the government implement its real sector policies. The 24-hour economy has been its flagship policy. I think last week I was speaking to you, I said, we have to start implementing. And then we begin to see the fruits. And then if we're able to leverage that to build a more robust and resilient economy, then we will be on the way.
Professor Sumi, one other thing that came up from today's meeting was the concern expressed by the governor about the proposed utility tariffs increased by ECG and Water Company Limited. How worried is the governor, you think, about the potential risks that could derail the progress made so far?
I think he has every reason to be worried. It's a real worry. The utility, the quantum of increment that has been proposed are quite extraordinary. I mean, I think on both sides, both want to hit us upward of more than 200%.
You think their justification really is untenable?
Well, I wouldn't say it's untenable. I think that we should not, we've been on this road before, where we are told that, we need to raise the tariffs to be able to do the necessary investment and then to improve the production and the supply. It's fair to say that we've given so much increment, and yet, the same problems persist. Everybody knows that there are issues, governance issues that have to be dealt with for ECG. There are procurement issues that have to be dealt with. So I think that perhaps Ghanaians will find it more palatable to deal with if we are beginning to see that there are measures to improve the management at ECG, to reduce the losses, the production or the distributional losses, and then I think the revenue collection has improved quite a bit. But we need to begin to see it's easier for us to pay more when we are beginning to see that the management is being improved, and I think that's what we want to see. But even if we saw that management improvement, I think to increase the electricity by upward of 200% at the goal I think it's a problem. But the governor has every reason to be concerned.
All right.
Because we have seen a steady disinflation over a sustained period now. We've done almost 9 or so months of consecutive decline. We are very close to the target. Mind you, we've seen that the cedi's depreciation, we are now going to see the pass-through. We have already started seeing it through the fuel prices, and that will take some time for us to see the full effect. And then now, if you want to top it up with a very substantial utility, output adjustment utility tariff, then he has every reason to be concerned.
All right. All right, very well. Thank you so much, Professor Patrick Esuming. I'm grateful speaking to us here on Business Live. To one other story that, of course, will be of great interest to you, prices of petroleum products are expected to go up by some significant margin from tomorrow. This is based on the pricing outlook report released by the Chamber of Oil Marketing Companies. The data showed that petrol is projected to increase by 3.66 to 5.86% per litre. Now, diesel, on the other hand, could be up by some 2.1% to 4.32 pesos per litre, I should say. And the adjustment has been influenced by recent pressure on the Ghana cedi. Let's get onto Zoom and speak to the Chief Executive of the Chamber of Oil Marketing Companies, Dr. Rivesing Opong, for some analysis on the back of these projections they are making. Thank you so much, sir, for joining us here on Business Live. So, based on your report, from tomorrow morning, most of the oil marketing companies will increase prices at the pumps, right?
Yes, good evening to you and your listeners. You're absolutely right. From tomorrow, from all indications, fuel prices tend to go up marginally, as I love to call it, but it depends on how you see it. And also depend on where you buy from. You should expect between 3 to 5.5% increase in petrol, and also 2 to 4% increase in diesel. You're going to ask yourself what is causing that.
Absolutely.
Ideally, at the international benchmark pricing level, we saw less than 1% increase. I think about 0.9% for petrol and 0.5% for diesel. So ideally, you ask yourself why then are we jumping to 3 instead of 0.9? And I think if I heard your previous discussion very well, the city, the
Economists.
speaker, the economist just hinted on it that they even also expect fuel price to go up, and that's the reason why we are going to see this increase. I think he made very solid insights on the causative agent around the CD depreciation. Many economists are saying that we are at the level where it should be, not the 10, but we should see around 12 CD to $1 for a long term. And like we also predicted at the chamber, that the flat price and the ICE prices are not going to increase significantly for quite a number of months till we hit into the October, November, get into the winter. But unfortunately, we see the CD depreciating gradually over the past 3 windows.
Meaning that so long as the CD depreciate, prices at the palms could be going up in the coming weeks and even next month. Is that the case?
Yes, so if you are calculating the SREF price of the fuel, ideally we need to convert from dollars to CDs. So it plays a very significant role in the determination of the fuel price at the pump. Because once we sell at the pumps in CD, the BDCs or the traders need to sell, to pay in dollars. So there should be an equivalent factor.
What managers of the economy do now to try and mitigate the impact of this on consumers, really, because of its impact on inflation, etc., and even the consumption of your products?
I think with where we are, you know that we've moved from 17 to 10, and now we're back to 14. I believe the Ministry of Finance is looking at it, and the government should be concerned at this moment with certain policy or political decisions that were made, so that we can revisit some topics and also look at the pricing mechanism to see what variables within the pricing model the price breakdown could be out to make the oil, the crude oil product prices a bit affordable. And I'm very happy you mentioned utilities going up by 200%. And for me, we are waiting for the implementation. Once that is implemented, we are going to have a very strong discussion with the government of Ghana. Because we were told, and you are aware, that they didn't want to increase the utility bills, especially the electricity bill. And that's why the 1 CD was added to the fuel price. So we are watching them.
What's the outlook like, even as we enter next month and even November?
With respect to?
Projection for the next pricing window.
Yeah, we just entered a new pricing window starting tomorrow. And that's the forecast we have that we're discussing today. And like I said, I think in March, April, we discovered that there'll be a plateau of prices range for ICE and flat. And that's what we are seeing today. And like I said, until we hit October, where the winter factor will come in, the flat prices should be stable. Unless there's an unforeseen war or hiccup somewhere, then that will be something that you can never model or even predict, right? But as far as the CD is stabilized, flat is stabilized, we are good to go as a country.
Dr. Rivesing Opong, thank you so much for your time. I'm glad you could join us here on Business Live. And the Minister for Energy and Green Transition, John Jinapor, has charged chief executives of African petroleum pricing or producing companies to take a drastic action to tackle energy access challenges facing the continent. According to him, issues of infrastructure and technology must be a priority of concern to members. John Jinapor made the call in an interview after opening the 7th African Petroleum Producers Organization conference here in Accra. More in this report. The summit was also used to hand over the chairmanship of the African Petroleum Producers Organization to Ghana as it plays host to the 7th summit. The meeting is expected to focus on key areas hampering the continent's progress in energy transition and transformation. Minister for Energy and Green Transition, John Jinapor, charged the members to collaborate and deal with the challenges head-on.
If I were to advise them, we should collaborate, we should integrate, we should work together, we should learn from best practices and ensure that the revenues that we get from oil is used judiciously for the betterment and welfare of the vast majority of Africans. In some countries, they depend on oil for more than 70% of their revenue, and yet the people do not feel the benefit of the oil resource. That for me is very, very important.
Chief Executive of the Ghana National Petroleum Corporation, Kwame Nto Amoah, believes the continent is blessed with enough energy resources to support economic growth.
We have vast resources, we have oil, we have gas. Ghana has, worked with our neighbors to build, infrastructure across Nigeria, Togo, Benin, and Ghana, where we get gas, for example, from Nigeria to Ghana. Even though Ghana has its own domestic gas resources, it's not enough to even meet our needs. So collaboration within Africa is important, and I think we have, examples of, positive collaborations, successful collaborations like the West Africa gas pipeline project.
General Secretary of the African Petroleum Producers Organization, Dr. Umar Farouk Ibrahim, believes that deliberations from the meeting will be centered on core issues which will be addressed by various members.
Challenges that are common to the African oil and gas industry, challenges that our national oil companies are facing, essentially challenges of technology. If you look at our national oil companies, virtually all of them are heavily dependent on foreign technology to explore, to produce, to refine and market their oil and gas. This is unacceptable, especially in an era of global energy transition, where those on whom we have been relying for technology have decided that they are now going to focus research on technology, on renewable technologies, not oil and gas.
The Ghana National Petroleum Corporation is the host of the summit and also as chairman of the organization. No longer within the petroleum downstream sector because players in that sector were engaged in the annual Petroleum Fund Games over the weekend as a strategy to improve friendship among members of the sector. The Fund Games, under the theme Beyond the Palms, witnessed key players winning the various sporting disciplines for the day, with Star Oil taking the overall best company of the day. Here's a report.
The Petroleum Fund Games is an annual event by the Chamber of Oil Marketing Companies to promote healthy competition among sector players beyond the boardroom and the stations. Disciplines including football, volleyball, circuits, swimming, and other indoor games were heavily contested by members of the chamber. Chief Executive Dr. Rivesing Opong is hopeful that this will help improve well-being and efficiency in the industry.
We are working in one of the most difficult spaces in the oil and gas sector. We work 24 hours a day. We are. As a team, we are also working 365 days. That means that you see the depots are working continuously, non-stop, trading happening every day. But we set this apart for what is more important. We call the bonding and the team networking. We compete among ourselves. My members compete among themselves a lot. So as you can see here, there's another competition some way, but with fun. That's what we call the pet fun. And he said beyond the pump, let's energize our talent and then build synergy together. That's what we are talking about this year.
Board chairman of COMAC, Gabriel Kumi, also told Joy Business that the energy exhibited in the games will ease pressure on members to finish the year well.
So we are in the 9th month of the year. We have worked so hard over the month. So we feel it's time to relax. It's time to share fun. It's time to compete not only at the pump, but on the field in the form of games like this. So we are basically putting this together to bring all of us together as one family and compete among ourselves. And we believe that will improve our friendliness, and we will take that spirit of friendliness, that attitude into our work.
And the good thing is that you can go to myjoyonline.com/business for all the business stories you need to know here in Ghana and beyond. Let's get some read on that for you. Ghana's trade surplus hit $6.2 billion in 8 months of 2025. Gross reserves reached $10.7 billion. That's according to the Bank of Ghana. Also, that portal, prices of petroleum products go up significantly from 16th September, 16th September it is. So you can get more stories when you log on to myjoyonline.com/business. Always a delight serving you. I am Pius Kojobaka. Let's connect at 8 p.m. with Prime Business.